Hello, sir. Welcome. Now it's on live, sir. You can talk to the students.
Yes, all the very best for your examination. Normally, that could be a concluding remarks by any faculty, but I'm just doing it in the very first stage. So, normally we tend to be looking into the time as how students would take up examination. Say, I thought I will better wish you all the very best in the very first stage itself. See, now let me just share the screen and start the session. And normally it is going to be the last one. Can you just see my screen? I hope, yes. Consolidated financial statement is the one that we will be taking up. So it is really a scoring topic. So now let me just briefly tell something about the need to have consolidation. See, we have something called as mergers and acquisition. See, in the case of merger, there are two companies, both the companies will go into liquidation. And you will be finding a new company, X, Y, or Z coming into existence. So, prior to being merged, X will have a separate standalone financial statement, Y will have standalone financial statement. And because they are working as a group, that being now a single entity, that being X, Y, or Z, there is no need to have consolidated financial statement. Their standalone financial statement itself is consolidated financial statement. This is as far as amalgamation is concerned. In amalgamation, two or more companies will get liquidated and a new company will be formed to take over the assets and liabilities. And the new company will have all the assets and liabilities of those liquidated companies, and therefore standalone financial statement itself will serve the purpose of a consolidated financial statement. If you take up another thing, that being absorption, where X will be purchasing Y Limited and Y will be getting liquidated and X will continue to be there. Now it will be X plus Y, it is going to be big X, which will have in it the old X as well as Y. So if you look into philosophically, it is X plus Y, here also it is X plus Y. And therefore, amalgamation and absorption are two different forms of merger. What is that? Amalgamation and absorption are two different forms of merger. So, in the case of amalgamation, both X and Y will get liquidated. In the case of absorption, only Y will get liquidated and X will continue to be there. But in essence, amalgamation and absorption are merger only. Many are under the impression that acquisition is absorption and amalgamation as merger is a misnomer. People just get misguided. So, amalgamation and absorption are two different forms of merger only. Then, what do you mean by acquisition? Acquisition is a scenario where company X will hold majority shares in Y. So, Y company will not get liquidated at all. There is no question of liquidation. So, X will be a going company and Y will also be a going company. Going company means there is no concept of liquidation. X is a going concern, Y is a going concern, but between them there will be a relationship where X will be referred to as a parent company, or you can call that as holding company. And the controlled company will be referred to as subsidiary company. When company X and company Y are in separate existence, and when they work as a group, we need to have consolidated financial statement as if there is only one entity. So instead of pursuing amalgamation or absorption, some companies prefer to do it on acquisition basis. In fact, it would be easier for corporates to try business on acquisition basis. Reason is that when XY has got to have as a single entity, they got to pay to 100% of the shareholders of X, 100% of the shareholders of Y, and therefore they got to have 200% of resources, and thereby they can own XY with nobody else involved in the company. Whereas in the case of X acquiring it fully of Y, so they should have 100% resource to pay Y, and thereby the new setup, that being a new X, which will be none other than X plus Y, and where you have 200 as the resource that you should be having, and here 100 should be there as resource. Whereas in the case of acquisition, where there is a parent or subsidiary relationship that you have, still you can control the entire entity of Y just by holding a little over 50%. There is no 51% that you have. So it is all fully a democratic setup as far as corporate entity is concerned. So let me put it like this way. In Tamil Nadu Assembly, we have 234 assembly segments. So imagine that we are forming a new party, that being CA Students Party. So the CA Students Party has got overwhelming response. So wherever we just see about our CA students who would run the country and all that, people are just giving a lot of enthusiasm, and they are turning out to be votes, and how many members we should be having in the assembly. So a little more than 50%. So 117 plus. That means if I have 118 members out of 234, imagine that I am also chief of that party. I will go and meet Governor R.N. Ravi and submit a memorandum saying that my party is having more than 117. That is 118. If you take the calculator and check up, 118 out of 234 will be greater than 50%, but it's definitely less than 51%. So many are under the impression that 51% concept is there. Let me tell you that there is no 51% concept that we have, but unknowingly people get into this 51%. More than 50% when you are having, then X company, which is having control on Y company, will be referred to as parent company or holding company, and Y will be referred to as subsidiary company. And in order to know the performance of the group as a whole, we are expected to prepare from their separate financial statement or standalone financial statement a consolidated financial statement. So therefore, companies which are engaged in acquisition, they are expected to have consolidated financial statement. So let us just put it this way, that consolidated financial statement is required only for companies where they are in existence separately. Only when they are in standalone position, in order to know the performance of the group as a whole. What is a group as a whole? Parent and subsidiary as a whole, you call it as group as a whole. And a parent can have many subsidiary companies. A subsidiary company can also have another subsidiary. So all these companies together, you call them as group. And it is sufficient that there is only one parent company, and the responsibility of preparing consolidated financial statement will be lying not with the subsidiaries, but only with the parent. Now, let us just know about the process as how consolidation has got to be taken up. So, as far as consolidated financial statement is concerned, that C, for which there are going to be 4 C's that we are going to take up. One, we will be noting down as cutoff. Then the next one is that we will be classifying the reserves and surplus of the subsidiary company. There is another C. And there is going to be another template, which I am going to call it out as chart. And lastly, this is going to enable us to prepare consolidated financial statement. Another C. There are 4 C's that we will be having. The first C is the cutoff, second C is the classification, third C is the chart, and last C is about consolidated financial statement. See, now let us just know about what is that cutoff. What is that we will be doing in the cutoff? In cutoff, we will be noting down certain basic information as what is the date of acquisition, B, what is the date of consolidation. So if it were to be a purchases made during the period, how many months had fallen prior to during the current period, how many months had fallen after post. Item number E, the percentage of holding. Item number F, minority interest, or you can call that as non-controlling interest. So this basic information we have got to draw by reading the problem under examination conditions. Next one, we are expected to take up the general reserve, profit and loss account, and revaluation of assets and liabilities. As on the date of consolidation, as where you have got to divide them into two, not revaluation alone, all these three, where you have got to identify how much they had at the time of acquisition, which are continuing even on the date of acquisition, consolidation, and the other one, which you call it out as after acquisition. The first one, DOA, will be referred to as what? Capital profit. The second one, you call it out as revenue reserve and revenue profit. Let me repeat. What existed at the time of controlling acquisition and continue to exist even on the date of consolidation will be referred to as capital profit, and that increased in the general reserve, profit and loss account, and revaluation. You consider that as revenue reserve and revenue profit. And when you are having revaluation of PPE, definitely there will be an item called as depreciation. Either it could be an excess depreciation or additional depreciation, depending upon whether the revaluation was a revaluation gain or revaluation loss, will decide upon as whether the subsequent period depreciation could be additional depreciation or excess depreciation. So if the earlier one is revaluation gain, the entity, the subsidiary entity would not have recognized this revaluation gain. They would not have charged depreciation. Additionally, we are expected to have additional depreciation to be deducted. If the earlier revaluation were to be revaluation loss, they would have charged excess depreciation, and we are expected to revert it or reverse it and bring to the correct position. So if it were to be revaluation gain, additional depreciation. If it were to be revaluation loss, we are expected to have this excess depreciation adjusted. So this chart is nothing but a template. This template is going to reduce your time to get your final solution. Consolidated financial statement has got to be prepared. So like this way, I would just say important 3 matters and others. What are those 3 important matters that we will be looking into? Number 1, it is goodwill or capital reserve. Then non-controlling interest or minority interest. Then next one is consolidated reserves and surplus. So these are the 3 things that we will be looking from this template, and the rest of the matter is simply parent plus subsidiary equal to consolidated figure. If you have no other adjustment, if you do not have revaluation, PP of the parent and the PP of the subsidiary, both are to be added, and you are expected to have the total PPE for the group as a whole. If you have an inventory of the parent, if you have an inventory of the subsidiary, then inventory of the group as a whole is going to be a simple summation of the parent and the subsidiary. These are the ways through which you can easily work it out and easily keep that matter ready. And you are expected to wait only for these 3 items. Imagine a scenario under examination conditions that you run only with 5 minutes and where your consolidation taken up as the last one, because some people would like to take up this at the last, thinking that it is very difficult without really knowing that it is the easiest of all the 10 topics that you have. What is that we are expected to do? So keeping these 3 items, goodwill, NCI, and consolidated reserves and surplus, the rest of the items you can easily work it out, and for that they will award marks. What you are expected to do, if it were to be a consolidated financial statement, especially for PPE and all that, so where you are going to have PPE in the that is in the title, and you are expected to note down for parent and subsidiary, and you are expected to write here the final figures as 150 and total figure as 150. So these sort of working is a simple work. A foundation student can easily do it. So imagine that there will be a portion in the solution which will be of foundation level only. And those items will be awarded with 6 marks to 10 marks. Easily you can just get it. See, out of the total the computation that you have, this particular portion is going to occupy 40 to 60 percentage of your computation. So you can just like that work without even looking into other items. So therefore, do not have any fear on consolidation. Firstly, fill up these others, and for the remaining 3, let us just know about shortcut as how we can make it up very fast. And in the process, I would like to tell something about pre-acquisition dividend. What do you understand from pre-acquisition dividend? So many are under the impression that this dividend is related to the pre-acquisition period. In fact, it is not so. It is dividend paid out of, what is that? Dividend paid out of pre-acquisition profits. Pre-acquisition profits. So dividend paid out of pre-acquisition profit is pre-acquisition dividend. The appropriate treatment is to credit to investments account, but invariably they commit the mistake by offering credit to profit and loss account. So they commit. So what is that we should do? Credit to profit and loss account, you got to rectify. How do you rectify? Rectification is carried out by debiting to P&L account, and credit is to be given to investments account. So this mistake invariably they carry out, and which we are expected to rectify. And we have downstream sales and upstream sales, and we have got to eliminate unrealized profit or unrealized loss has got to be eliminated. See, all that we will be just seeing. So it is better that we take up a problem and create that confidence. Okay. See, now I will take up 2 book back question, even though the solution may be available with you, but here it is not about knowing it. We should know how to solve the problem in the least possible time. Okay. Now, I would like to take up on to question number 4. Just watch. A Limited acquired 1600 ordinary shares of rupees 100 each of B Limited on 1st of July 20X1. On 31st of December X1, the balance sheets of the 2 companies were as whereas given below. Balance sheet and subsidiary B on 31st of December 20X1. Shareholders funds 500,000, 200,000, reserves and surplus 297,200, 182,000, trade payable 47,100 and 17,400, short-term borrowing 80,000, 924,300, 399,400, property, plant and equipment 390,000, 315,000, non-current investment 340,000, inventory, trade receivable, cash and cash equivalent. So here share capital where they are given the breakup, both are having face value of 100 each. In one case it is 5,000, another case 2,000. This information you got to compare it with 1,600 what they have just mentioned, the date of acquisition being 1st of July, and 1,600 against 2,000 is working out to 80% of the holding. The remaining non-controlling interest or minority interest should be taken up at 20%. Now you have reserves and surplus. So though they have just given us information regarding the total in the balance sheet, but the breakup is very much provided here. And unless otherwise stated, we normally take it up that general reserve is a balance that arose during the current period. Anyway, let us just have a quick look at the other items that we have. The profit and loss account of B Limited showed a credit balance of 30,000 on 1st of January X1, out of which 10% dividend was paid in 1st of August. A Limited credited the dividend received to profit and loss account. This is what we have expected. They will commit the mistake, they got to rectify. The plant and machinery which stood at 150,000 on 1st of January was considered worth 180,000 on 1st of July. This figure is to be considered while consolidating the balance sheet. The rate of depreciation is 10% computed on the base of useful lives. Prepare consolidated balance sheet as on 31st of December X1. So now let us just understand as how we can crack it. So what are the steps that we are expected to take up. So it is question number 4, book back of chapter number 10, CFS, ICAI study material. Okay, so this is what we have. Now, the first step is we are taking up cutoff. So what do you mean by cutoff? We would like to know what is the date of acquisition. See, if you look at a little higher at your level, I would just see if you are taking up CA final. I consider that you are all a CA final student, and that way you be prepared for IND-AS 103. So in IND-AS 103, which captures majority of the procedure of consolidation there, we consider 3 important things in the case of business combination. So you need to know who are the parties, who is the acquirer, who is the acquiree, what is the business activity, what is the date of controlling acquisition. So the date of controlling acquisition is 1st of July X1 and date of consolidation is 31st of December X1. And during the current period, it was just bought prior to 6 months, post 6 months period, and the percentage of holding is 1600 against to 2000, which is working out to 80%. And NCI, non-controlling interest or minority interest, would be the other 20% that you have. Is that right, all of you? So first and foremost thing is this is what you are expected to do. Next thing that you take up is classification. Under classification, the first item that we do is, or the first item that we carry out will be general reserve. So general reserve as on this particular date, is 100,000. So 100,000 is what you understand as general reserve, and we take into consideration the opening balance during the current period. So when nothing is mentioned, we will consider that as nil balance only. So the current year figure of that is the closing balance figure is nothing but the current year figure, and in that you take it up for the first half and the second half, because this is the first half and this is the second half. So by that you take it up as 50,000 here and 50,000 here. So this is on the assumption that opening balance is nil. So this is an assumption that we are bringing out. This is what in our institute study material also they will be bringing out. Though in the study material, they have not mentioned about what exactly is the thing that you will be doing. So, but in the classification part of reserves and surplus, so they would normally be taking it up. Assume that there is no movement in the reserve during the year, and means 1st of January figure is same as the. So now they have just done exactly the opposite of what they were doing it in other cases. So we will fall in the same line with what they have just given there. So we will assume it as opening balance and closing balance as same. So it is all the exactly opposite of what I just conveyed. In majority of the problems, they used to do like that. So opening balance 100,000 and it is going to be nil and nil. Nothing wrong if you do the opposite also. But put the assumption. They have also assumed. So for want of information, they have assumed one thing. So don't immediately students will ask, sir, what if I do like this? Don't worry. Your solution will be evaluated based on the assumption. Is that right? So if you want me to do with the assumption that they have normally carried out in other problems, I will do that. So, okay, I will do like that because in institute, they have already made a presentation. So you will have 2 different types of solutions. So better we will have it like that. So opening balance being nil, and during the current period only, there is an increase in general reserve to the extent of 100,000. So 50,000 in the first 6 months and 50,000 in the second 6 months. So therefore, there is a different type of or different approach on the same subject matter you can have. So you can experience 2 different types. One, what institute is giving, that you can experience. The other one, on the assumption that we have just done right now, that opening balance being nil and the current year end, that is end of the year figure is nothing but current year's increase only. So therefore, the opening balance plus the first 6 months, 50,000 will be taken up as part of capital profit. This will be taken up as revenue reserve. So whatever they have, they had at that particular point of time, we will take it up as general reserve. See, many people used to ask this question in the class. What is that? General reserve is only an appropriation made during the end of the period. So therefore, general reserve was created only at the end. So can we take the entire 1 lakh as part of our revenue reserve and keep nil for the opening? So though on an argument basis, it may be looking right, it may be seeming to be correct, but it will lack the logic, because the source of general reserve generally is from profit and loss account. Unless otherwise stated, we bring out an assumption for profit and loss account that profit is earned evenly throughout the period. What is the assumption that we make? Profit is earned evenly throughout the period. If such be the case, the source of general reserve being the profit and loss account, the profit and loss account, which has got a special feature that it earns evenly throughout the period, why would general reserve alone to be taken up entirely coming under revenue reserve? So how profit and loss account is to be treated? Same treatment should be given to general reserve, unless they provide in a problem that general reserve was created only during the post acquisition. Unless otherwise stated, we'll normally be assuming that profit is earned evenly throughout the period. Same assumption we extend to general reserve also. I hope that this point is clear. So let me repeat once again. Our institute quite often would assume that when no information is given, that general reserve balance, they will take it up as earned during the current period. Yeah, and in some cases, they have done both ways. So you don't have to have a feel that the institute is right always. No, they bring out an assumption. So institute is also right, you are also right, everybody is also right. That's everybody you can claim as right. So long as we are following in a particular stream, they will accept. So the examiners will be provided with alternative solutions also. So you just don't worry about that. So in fact, I have cleared the examination with good marks in accounting for a simple reason that I have just made all the points very clear and neat and tidy. Even though the balance sheet was not agreeing, I kept it open. So let them affect the total. I have totaled up and they are not matching. What to do? I left it. So I did not spend time over and above on to the required time, 18 minutes, 20 minutes. More than that, we cannot be just spending on one. So we can better concentrate on this. So if 5 questions were there, only one I got it tallied, and the remaining 4 were not tallying, but I made sincere attempts. I got some 64 or 68. I don't exactly remember. But there was a satisfaction level I had, though the satisfaction of tallying was not there. But overall basis, we did right. So have that in your mind. So this is one particular assumption that we are making, that opening balance being nil, because when they have given for profit and loss account, so much they had. If they were to have one against general reserve, they should have provided. When nothing is provided, it was not there. That is what institute is providing as a stand. So in this problem, they have done it differently. We are doing it different types. The next, profit and loss account. So in profit and loss account, how much is the figure that you find that they are having? 82,000 is what you find at the end. And you have opening balance. Opening balance, they were mentioning something about they had 30,000, out of which 20 and 10% dividend that they have declared. So no problem. So they had for 30,000 rupees, no problem. But dividend got declared. Which year's dividend? This dividend was declared. Naturally, 1 year's profit, they will ascertain only in the following year. And that year's dividend will be declared only in the following year. So therefore, dividend at the rate of 10% on 200 lakhs comes to 20,000, and that has got to be deducted. And though they had 30,000 rupees, no doubt, on 1st of July when they bought, but by 1st of August, when they have declared, they have issued it only from the opening balance. They follow first in, first out method as far as profit and loss account is concerned. So what do you mean by that? Last year's profit is included in the opening balance, so therefore they have included it. So therefore, current year figure is 72,000. This 72,000 can be split into two, first half and second half. And with 36,000 in the first 6 months period, 36,000 in the second 6 months period, and 46,000, we will take it up as capital profit. This will be termed as revenue profit. Please understand, increase in general reserve, I would like to refer to as revenue reserve. Whereas increase in profit and loss account, I better use the term as revenue profit. That is revenue reserve and this is revenue profit. The term revenue is indicating that we are doing it for post-acquisition period. So capital as frozen at the time of acquisition, continuing to exist even on the date of consolidation, being capital profit. The increase that took place in general reserve and profit and loss account should be taken up as revenue reserve and revenue profit. Now let us just take up the next item, that being revaluation. See, fantastic adjustment that they have provided. Now let us just take up on 1st of January, it is 150,000. So on the consolidation date, let us just know about from their PPE, how much figure that they were having. So you understand that they are having 135,000. So PPE on 1st of January, it was 150,000 and PPE by 31st of December, you have it at 135,000 and we understand that 15,000 is the difference, that being the depreciation. So by calculating the depreciation percentage, it works out to 15,000 upon 150,000, working out to 10% WDV. Even though they have used a term that the rate of depreciation on plant and machinery is 10%, though they have mentioned, they need not have mentioned, they are extravagant. They need not have just done that. Since it is a problem at intermediate level, they wanted to help the students community. Even if that material information is missing, still the problem can be solved. Are you understanding? This being the depreciation as on that particular date. What is the expected WDV? Expected WDV on the date of acquisition, that is 1st of July. It should be 150,000 minus 10% on 150,000 on a pro rata basis, where it is 6/12 when you just make it. How much it works out to? That means this 15,000 is for both the halves, first half and the second half. For the first half alone, if you take up, that comes to 7,500 and it is 142,500. So this is the expected WDV on this date, and it is to be revalued. It is to be revalued at 180,000. At 180,000. So you can understand that there is a revaluation gain. There is a revaluation gain to the extent of 37,500. There is a revaluation gain to the extent of 37,500. So what is the additional depreciation that you are having? There are two methods of looking to the subject matter that you have. Let us just try both and we will adopt only one. Since it is a classroom, I have the luxury of doing it in two different ways and choosing one for the purpose of presentation. But I would just suggest you to try both, provided you have the time. Otherwise, you put a note and then proceed only one. So since it is a classroom where there is no pressure for me and for you also, that it is to be finished within 10 minutes, 15 minutes, 20 minutes and all that. Now, let us just do that. So additional depreciation is 10% on 37,500 for 6 months period. So how much it comes to? So I'm just not having the calculator, just rushing back from my personal work. I'm using my mobile for this purpose. So 10%, 0.1 into 37,500 divided by 2, that gives me 1875. 1875 is method number 1. So this is based on this additional depreciation is worked out this way. So 10% on 37,500 into 6/12. This is one way of looking to the subject matter. There is another way. This is alternative 1, you can say. Alternative 2, we can do in a different way. What is that alternative 2? All of you closely follow. So your WDV on this date being 135,000 on the date of consolidation, and I have loaded a revaluation gain to the extent of 37,500. Now it is 172,500 will be the figure that you will be having PPE without additional depreciation. Am I right? Without additional depreciation, it is 1,72,500. Okay. Now expected closing WDV on revalued basis. On revalued basis. How do we do that? So all of you closely follow, it is 1,80,000 into, sorry, 1,80,000 on 1st of July minus 10% on 1,80,000 for 6 months period. So how much is that I should be deducting? If it were to be for 12 months, I would have deducted 18,000. Only for 6 months, I got to deduct half of that. So 9,000 only. And it is 171,000 I got to disclose as my expected closing balance. So before additional depreciation is 172,500. By taking up that depreciation, it is 171,000, and thereby I can have additional depreciation only to the extent of 1,500. Either it could be 1,875 or 1,500. Both the alternatives are correct, but you have got to choose only one. Now let us just find out what institute had just done in their solution. Question number 4. So how much is the additional depreciation that they have taken up? So now let us just take up additional depreciation for plant and machinery. They got a working note number 7. Working note number 7, on which let us just find out as how they have just worked. So they have just got additional depreciation on pre-acquisition value 6,000. 171,000 is what they have just got. So that means institute had just worked out 171,000, alternative 2. So therefore, what is that we shall do? Let it be like what institute has done. We will take other alternative so that we will have two different sets of solution. Both are correct. So they only brought out an assumption. Is that right? So now let us just consolidate and bring out in through the appropriate chart. Okay. See, now let us just do that. All of you just feel thumbed up when you have many methods. So you have many alternatives institute would be providing. So this way, we have just developed that classification, getting over, cutoff over, classification over. Now we will be taking up that template, which will be referred to as chart. Now let us just do that. How do we do that? We will develop that date of acquisition, date of consolidation, revenue reserve, and revenue profit. So let us just have. So in between, when you want to have a break also, we can have a break by 5:30. For 5-10 minutes, we can have and then try. So our friends are just sending message. Okay. So equity share capital, general reserve, profit and loss account, revaluation gain, additional depreciation. So these are the things that we have. So first and foremost thing that we should be doing, we have to update DOC, date of consolidation. DOC stands for date of consolidation. So we are expected to take up 200,000. General reserve separately at 100,000. And this at 82,000. Revaluation gain. Revaluation gain on which there is no two different opinions that we are having. Revaluation gain 37,500. 37,500. And additional depreciation that you have 1,875 within brackets. Okay. Now let us just go and update DOA. So 200,000 general reserve stood at 50,000. Remember that 50,000. So there are two different ways of looking into the subject matter, and we have just chosen on the date of acquisition. We are having 50,000 and the other 1 lakh that you have. So you can say that the additional 50,000 had just come after acquisition. So these are all after acquisition matters. And for profit and loss account that we were having 46,000. Am I right? How 46,000 we have just kept? Remember that in profit and loss account, we have just done 46,000 as existed on the date of consolidation, acquisition. And after acquisition, it is 36,000. And revaluation gain was 37,500. On the date of consolidation also, it was 37,500, resulting in no portion of that coming up here. Additional depreciation is a post-acquisition matter, which is to be taken up here, 1,875. So now, I wanted to just firstly try by hand, that is manually, and for the purpose of computation and for the purpose of developing that speed in our working. So I'm just doing it once again. DOA, DOC, RR, and RP. Is that okay? So equity, share capital, general reserve, then profit and loss account, then revaluation gain, then additional depreciation. So you are having 200,000 and a general reserve 100,000 and it is 82,000. Revaluation gain 37,500 and it is minus 1875. Now let us just look into that figures as 200,000 and 50,000, 46,000, and it is the same 37,500. There was no additional depreciation attributable to that. See, now the difference between DOC and DOE is going to be revenue. So now let us just do that. 82 minus 46, and that we are doing it here in this case also. Now let us just effect the total and extend the total to all the columns. So with that, we will note down the percentage of holding. Percentage of holding, where it is 80% should be noted in all places except DOC. In DOC, we will be noting down the minority interest percentage, 20. In rest of the places, we will note down only that 80%. Okay. Now, by applying that, we will be arriving at the net worth. So, what is that? 80% multiplied by 3,33,500. On the same lines, 83,525 and 40,000 and 27,300. So, now let us just note down the investments. So, whatever they were showing it out as investments, so you understand that non-current investment, 3,40,000 rupees for which they have given you the schedule, which is nothing but investment made by parent company on subsidiary company, 3,40,000. And that I would like to keep it in inner column because this figure is inclusive of dividend, which you say that it is cum dividend. You bought it at cum dividend. So pre-acquisition dividend, because dividend is related to the last period. So how much is that pre-acquisition dividend the parent company would have received? So they would have received 80%. So pre-acquisition dividend, though 20,000 rupees they have deducted. So A Limited received 80% on 20,000, that being 16,000, we have got to deduct. So that mistake that they have committed, instead of offering credit to investments account, they have credited to profit and loss account. So minus 16,000, and the same has got to be deducted from profit and loss account. That is from revenue profit. When you are making that deduction, it is as good as deducting it from profit and loss account. Now the net figure of investment is 340,000 and comes to 324,000, and you will have end up with a goodwill because you made greater investment than the worth. So 324 is the investment that you made against 266,800. Your goodwill is going to be 57,200, and there is no downstream or upstream. And let us just pick it up the SFS of the parent, general reserve and profit and loss account. So let us know about how much they were having in general reserve and profit and loss account. So 240,000 and 57,200 against profit and loss account. Is that right? 240,000 and 57,200. Now, what is the figure that we will be taking up in CFS? In CFS, we will take up 57,200 and for minority interest, 83,525. And for general reserve, we will take up all matters from this stage to whatever SFS in which we are taking up. It's 2,80,000 Same is the way we are going to take it about the number that being 68,500. Is that right? And now consolidated revenue reserves, consolidated reserves and surplus will be 2,80,000 plus 68,500, which is going to be 348,500. People would like to know the breakup from where we are just getting 2,80,000 plus 68,500. So this being the basis, this being the chart, this being the template, or whatever name through which you call, but this will increase the speed and you can quickly get the answer. Now let us just pick up the consolidated balance sheet. How we are updating, let us just see. What is that order in which they are given? Same order we will take it up. Firstly, equity share capital. Equity share capital of the parent alone will be updated there. So now let us just do that. Equity share capital. Equity share capital. So that means it is only the parent's equity capital alone that we have got to update. So 500,000. Then comes consolidated reserves and surplus. Reserves and surplus. From where we are picking it up? Only from this working 348,500. The next item that we have got to take up is minority interest. Their number is 83,525. Correct. Rest of the matter is only simply addition. So these two matter. Trade payable. So what is that we are expected to do under current liabilities? Under that, trade payables. So under that you have company A, then company B. So we have to simply pick it up. This is what I was just referring to as foundation students work only. 47,100, 17,400. 47,100, 17,400. So now you are expected to sum up these two and see that it is part of your consolidation. Very simple work, no? See, except for that three items, rest of the matter you got to do only this. Now, after trade payable, short-term borrowings, 80,000. So I would like to take up this short-term borrowing. So it is 80,000 and 0. Now, there is nothing that we need to be really worried. So now let us just sum up. It is 1076,525, right? Then we need to have property, plant and equipment. Let us just take up that. Property, so we will have a broader title, non-current assets. Under that, property, plant and equipment. Under that, we will have for A, B, revaluation gain, then additional depreciation, we will have one by one. So now let us just pick up that for 390,000, then 315,000, and we know how much is the revaluation gain that we have updated. 37,500. Additional depreciation is 1875. Now we are expected to take up the sum of these items. Sum of these items being 740,625. This is what we will be having for property, plant and equipment. Non-current investments against which we have just eliminated, and we have got intangible asset, that being goodwill. Intangible asset, that being goodwill. So goodwill, from where we are picking it up? From here, 57,200. So now every item you go in the same order. Next, current assets. Now let us just take up for current assets. Current assets, inventory. Under that, you have this setup, because absolutely there is no problem that we have 120,000, 36,400. 120,000 and 36,400, right? 59,800, 40,000. $59,800. Then the other one is 40,000. Huh? Yes, 40,000. Against what? Against trade receivable. Against trade receivables. Next item being cash and cash equivalents. Cash and cash equivalents. As how we are just taking it up? Same way we will be just copying and pasting it there. So what are the respective figures? 14,500 and 8,000. 14,500 and 8,000. So 14,500 and 8,000. Now it is ready. From here to this, we have got to make it ready. So you have the same number, you just see 10,76,525, 10,76,525. It is agreeing, my dear. It is agreeing. Now, since it is an Excel and I wanted to keep a copy where I just create a copy. So what if I just follow institute way of doing things? So remember, I was just doing it like this way. Additional depreciation, alternative number 2, 1,500. If it were to be 1,500 minus 1,500, just see, it is coming to 1076,900, 1076,900. Only one change I made, everything underwent a big change. Just one entry, all places change it up. Similarly, we can do this way also. What? The entire 1 lakh, you can keep it for general reserve as how institute did. So if I just put 100,000 there, just see 1036,900, 1036,900. You can just cross verify our institute's working. Let us just understand as how the answers would 1036,900, that is what you are seeing. So do not panic. Please keep cool. All of them are human beings only. Seated in the institute are human beings only. They have a different version. You have a different version. They recognize your version. You recognize their version. No panic at all. You can just work out in whichever way you feel like that you are comfortable. Put very clearly at the top, on the face of it, you put it very clear. These are the assumptions that I'm making. These are the ways that I'm just working out. Since the problem did not carry the relevant information for you to proceed. Right? That is the way you got to take up. Are you clear about this particular matter? I hope that things would be very easy for you to evaluate. Okay. So with that, with the time that is provided to us, consolidation is over. See, I will not say that all consolidation problem will be solved just like that. I would just put it this way. One important thing, there are 4 C's: cutoff, classification, then the template, then lastly the consolidation. So how we have attempted, say they are doing it with a lot of care, with 3 months, they prepare a suggested answer. You are having only 3 hours. You can't do what institute is presenting in the form of there is suggested answer. You do in the way. The examiner will understand that you are a student. Don't expect your handwriting to be like that of a printing material. No. So examiner will understand. So long as the concept is very clear, he will be very happy to award full marks. If I could get 64, 66, even without having the balance sheet agreed, and I have cleared with good marks in other papers also, I have cleared everything in the very first attempt. So though I just People have just taken my brief profile for the purpose of introduction. Let me tell you, I have completed my chartered accountancy at the age of 21. At the age of 21, I could just do. I did not come from a very big educational background, nor in my family anybody had just gone or done chartered accountancy. My dad had just completed his PUC. That too, after getting into his employment, he completed at the age of 30, 40. First time person entering into college. Only on getting into the college, Vivekananda College in Chennai, I could just see what is CA. Then started studying, and little hard work was there. A little hard work, God's grace, my ancestors' grace, and parents' wishes, teachers' wishes, all that ensured. So my proportion is only less, but thing is that I was consistent. I never lost any confidence. I felt that every time examination in which some people are clearing, why not myself in that particular list? So don't feel that it is very tough. It is very easy. Consolidated financial statement is very easy. For 3 items you have got to do. And one more thing, in that brief biodata, I was just telling you, my younger brother, who was a diploma holder in engineering, and he completed his CA, now he is a CPA also. My daughter completed CA final in rank. My son, who took BE and wanted to pursue after BE, or on the way of doing BE, wanted to quit. I said, don't quit, simultaneously study. Now he is into CA final. So there are a lot of people like that. See, in our there is association, we have a CA final student pursuing at the age of 72. I do not know as whether I to call him by name or sir, Natarajan sir. So therefore, please just don't feel that it is very tough and all that. It is very easy only. Thing is that you should have a proper approach, a lot of practice and faith in God. Give the best. He will take the rest. Now, let us just take up on to partnership. Dissolution of firm. See, now consolidated financial statement is over. See, in a particular class of only 3 hours, the entire thing I have to cover except AS would mean that is too short a time. But we have to give the best. Say, when you have a test match, when you have ODI, when you have T20, players are playing with same gloves, bat, helmet and all that. Only the jersey, the color of the item will be undergoing a change. But in all the cases, the attitude for winning will be the same. So therefore, whether it is a 3 hours of class or 6 hours of class, only 2 hours, we are going to hit. We are going to take up something very easy. Make our life very easy. Now let us just try for dissolution. See, now let me just tell something about dissolution. So where you have a firm, there are various reasons, factors which will result in dissolution. In that, you would be finding number A, no going concern concept. Say, when you say firm dissolution, no going concern concept is present. No going concern concept or going concern concept is not present. I will put it like that way. Going concern concept is not present would mean the embodiment of going concern concept is manifested in balance sheet. When you have going concern concept, you have balance sheet. When you do not have going concern concept, there is no need to have a balance sheet. So you have to knock off the balance sheet. So therefore, you got to transfer all assets and liabilities to realization account. So you can say dismantle the balance sheet. What is that? Transfer all assets and liabilities to realization account, dismantle the balance sheet. Here is a place where I wanted to differ a little from what institute would do. I'm not blaming institute. There are some inconsistencies that you have with institute. I've used the term all assets and liabilities. But institute will do at one place one way. For a similar scenario in another place, they will do it in a different way. This is what I said as inconsistent. I'll tell you what. See, you need to be consistent in all places. Okay, consistency is a very, very important for reliability. If you are changing color at different points of time, what is right, what is wrong, nobody will be knowing. So when you are grown to that particular stature, you have to be very consistent. I'll tell you what. When we are talking about liabilities, liabilities will be classified into two as external liability and internal liability. What is an external liability? Trade payable, bank loan, etc. Or external liabilities. Or to outsiders, you are to pay. What do you mean by internal liability? Partners extending loan. Partners loan to the firm. Correct. So, both are to be given same importance, is what I am telling. Why I will tell you. Institute, what they do is that they will transfer the partner's loan to capital account, which is not correct. Which is not correct. It may be correct if partners have taken loan from the firm. But when partners have given loan to the firm has got a liability towards that particular partner. That is what we are telling. So, partners' loan to the firm should not be transferred to capital account. Do not transfer. Why? Because when it comes for dissolution, when you have Garner versus Murray, where insolvency of one particular partner, when you got to distribute to other partners, where capital ratio you got to use. Capital ratio you got to use. How can you include the loan given by the partner as part of the capital ratio? Are you understanding? So, therefore, let us be consistent. Same result you will be getting. But in Garner versus Murray, they do not take up the loan into their capital account. For all other purposes, they are taking. So, therefore, let us be very consistent. Let us be very consistent. So, therefore, we will treat internal liabilities as if it is an external liability. Problem will be silent regarding how the internal liabilities are discharged, paid off. Then what is it we should do? So when the problem is silent regarding what liabilities are getting discharged, we should only be coming to a conclusion as what? Even internal liabilities are being paid. They don't have to tell in the problem that internal liabilities loan is repaid. They don't have to tell. They don't have to tell that trade creditors, trade payables are to be paid, bank loan have got to be paid. They don't have to tell. When it is a liability of the firm, it becomes the duty of the partners to discharge. You should know their duty and therefore you should pass a journal entry even without an instruction, and you got to pay for partners' loan. Do not take what? Partners' loan to capital account. Do not do that mistake. But if partners have withdrawn amount from the firm, please do transfer that to partners' capital account because they owe to the firm. Firm is on the upper hand, therefore you have got to do it. Are you understanding? Here I'm talking about only liabilities. I'm not talking about partners having debit balance or drawn money from the firm. I'm not talking about that. So, institute, what they used to do is that they used to transfer internal liabilities, that loan taken by the partners. Loan given by partners to partners' capital account. For that portion alone, I'm saying be consistent, because for Garner versus Murray, they do it different way. For accounting, they do it in a different way. Please just be careful with that. Reason also I'm telling you. when it comes for Garner versus Murray, to the extent of loss resulting in dissolution, they have to bring in cash. And in your cash account, when you are taking these figures, then the final figure of cash flow will get affected. So in a problem, you can understand it better. Now, let us just understand those steps that are involved. So right at the very initial stage, what the inconsistency portion I conveyed to you, there are 5 steps that we have. First one is dismantle the balance sheet. Dismantle the balance sheet. That means transfer all assets and liabilities to realization account. 2. What is the second step that we are expected to do? So dispose of assets. Dispose of assets and liabilities. They don't have to tell anything about liability. You got to pay them in full. If they tell that they got to be paid a little less or they got to pay a little more, take their instruction. Otherwise, balance sheet figure of liabilities you got to pay even without any instruction. Then 3. Say after dispose of assets and liabilities, there are certain item of assets and liabilities where they cannot dispose it of. So why? So the property may not be easily selling item. It could be a real estate property, or it could be a debtor where he may be a bad debtor. He may be taking time and you can't keep it open. Dissolution cannot be kept open for a long period of time without any destination. So therefore, they will come to a conclusion that takeover of assets and liabilities by partners. What is that? Takeover of assets and liabilities by partners, right? So dismantle the balance sheet, transfer all assets and liabilities to the realization account, dispose of assets and liabilities, takeover of assets and liabilities by partners. Then distribute the profit or loss to partners from a realization account. Then lastly, settlement amongst partners. Settlement amongst partners. That is, cash account shall be agreeing. This is for a simple and straightforward dissolution problem. Are you understanding? Now, you should definitely be understanding. No problem there. Now, let us just take up a problem. Now, let us just take up illustration number 1. X, Y, and Z are partners of the firm X, Y, Z and company sharing profits and losses in the ratio of 4:3:2. Following is the balance sheet of the firm as on 31st of March X1. Partners capital X 400,000, Y 300,000 and Z 200,000. General reserve 90,000. Sundry creditors 320,000. So a million. So 1.31 million, the total. On the asset side, 500,000 fixed asset, stock in trade 300,000, sundry debtors 500,000, cash in hand 10,000. The partners of the firm decided to dissolve the firm on the above date. Fixed assets realized 520,000, book debts 440,000, stocks were valued at 250,000, and it was taken over by partner Y. It was not sold but taken over by partner Y. Creditors allowed a discount of 5% and the expenses of realization came to rupees 6,000. So you are required to prepare realization account, partners capital account, and a cash account. Fortunately, we are not having the loan account. So I'm just trying out a problem with partners loan. Maybe the next problem we can just do that. Having read that problem, let us just finish it off. Right. Illustration number 1. See number 1. we are expected to prepare number one, realization account. Then number two, we are expected to prepare the capital account of the partners. Say, I always believe certain amount of neatness in the preparation of accounts. Okay. Say, in the examination conditions, flipping through many pages and preparing ledger accounts would cost us heavily. We may miss certain items. So far as things are possible, you please retain that within one page or maybe left and the right and not go to the next one. The reason is that you have to flip through every movement that you are making under examination condition is very, very important. See, when you know that a batsman is running towards the other crease, so he will be putting this, if this is the crease, the bat that he is holding, he will be rolling it and he will be putting it on the ground and he will try to reach this. So what if he is just putting it like this? So the contact may end up with a fraction of a second, he may be an out. If he does like this, possibly the effort will be a little less and securing it as not out is more. So every moment is very important. So therefore, it is the best thing that you do is have in one page itself. But from my student time onwards, I have seen that preparing ledger accounts with 3 accounts with the left and right would mean our column size will get reduced. Column size will get reduced. And the numbers also, the numbers also will have problems like 0 will become too small and we will not be in a position to differentiate between full stop and 0. So therefore, taking all that into account, I would strongly suggest to have credit and the debit. In a vertical format, you can just do that. So that in eyes view, you are just getting it. In your eyes view, that is in one eye view, you are just getting everything. You need to plan your paper as how you got to go about. If it were to be examination, this is on the left hand side and this is on the right hand side, you please do it within that. Don't go to, if this is page number 1, this is page number 2, don't go to page number 3. Don't go to page number 3. Within 1 or 2 pages, you please just do that. Reason I told you. See, after all, it is our life. We have got to script our success in a very confirmed way, confident way, and let us not leave any room for the institute to reduce marks and fail us. Let us not give any room. We will study well, make the best presentation. Rest, leave it to Almighty. Now, let's go through. To fixed assets, how you update also, I will tell you. To fixed assets, short form and all that, please just don't worry. But presentation, it is always good, no. Even when my article student is bringing out FA, I will ask, what is this FA? So, right, to fixed assets. Here, for lack of time, I am just doing it to stock, to sundry debtors, to balance brought down. Then capital account, by balance brought down, then by general reserve, by creditors. So these are the ways, firstly, I will update. So time and motion study, research study, they have just made. If you are having alphabetical writing and then numbers when you are writing, you become automatically slow. So when it is only words, you will be very fast. Only numbers will be very fast. But if you are doing it both, there is a tendency that you will be losing our time. So therefore, you will update this way. If possible, if the numbers are going to be in thousands, it is better that you put it out in thousands. Correct. Rather than in full, what is the meaning in writing so many zeros? So put it that way. 500. 300, 500. Next, 10. Update. The next, 400, 300, 200. 400, 300 and 200. General reserve. So they are to be distributed in the ratio of 4:3:2. 4:3:2, 90. So it is 40,000, 30,000 and 20,000. So 90K into 4:3:2. That's it. So don't get the impression that working notes would mean you have to put one number called as working note number 1 as working note. It's not like that. Let me tell you. Very long time back, I was examiner for one of the papers. I should not tell, but I'm just telling you. Working notes, what they mean is a computation when you are bringing out there. That computation working you have to show. It is not that what you are writing as working note is working note. It is not like that. So 90K distributed in the ratio of 4:3:2. That is enough. That is working note. You don't have to put one outside your solution and say that is working note. Not like that. Please understand this. 90,000. Sunday Kadidas 320. So some discount and all that they are talking about. Let us just take up that discount and all that. Now, partners decided to dissolve. Now, how many steps that we have completed in the 5 that we have noted down? Dismantle the balance sheet. We have dismantled. We have just done. Transfer all assets and liabilities to realization account. Capital accounts of the partners to capital account. Reserves to be distributed. Dispose of assets and liabilities. What do you mean by disposal of? They have mentioned fixed assets realized, book debts 440. In cash account, to realization account. So here you got to tell 520 and 440. It is 960. By cash, 960. Right. So fixed assets and book debts. Stock taken over at a value of 250 by Y. 250 to realization, stock taken over 250. Correct. Say you go by the same order. Don't jump here and there. You set that playing field and work accordingly. Creditors allowed a discount at the rate of 5% and expenses came to 6,000. So by realization account, so creditors 5% would mean 95% of 320. How much is 95% of 320? .95 into 320. 304. Then expenses came to 6. 310 it is. Here to cash 310. Correct. So fixed asset realized taken over and the payment, all that over. There was no loan account and all that. Say now, what is it you have completed in these steps? Takeover also just done. Now you have got to find out profit or loss. Now let us just know about profit or loss here. Whether it resulted in profit or loss, how do you know it? Whether it resulted in profit or loss, how do you know it? Any idea? I think it would have resulted in loss. Let's just check up. So total is 1610. Let me use my mobile. From there, I'm using a calculator. 500 plus 300 plus 500 plus 310. So 1610 by X, Y, and Z. How much is the loss? From here, I got to deduct 320, deduct 960, deduct 250, which results in a number as 80. So let me just check up. Yes. What is the ratio that we are expected to use? 4/9, 3/9, and 2/9. 4/9, 3/9, and this. Okay. So now let me just take up 80,000 into 4/9. It is 35 point something. I am rounding it off. Not a big deal. Divided by 4 multiplied by 3. 26. So I will make it out as 27. 26,666. Divided by 3 multiplied by 2. It is coming to 18. So somewhere I got to make that adjustment. So I will make it out as 17. So making that as full 80. Correct? To realization. 36, 27, and 17. I thought the number will be round numbers, so which will not have any impact here. Don't worry about that. So it's only number. We are not committing any principal error. It's only approximation. To cash. So what is the total that you have? 440 as the total, 330 as the total, and 220 as the total. We need to have 440, 330, 220. So it is 404 by X 404. Here 327 and it is 3. Only 3. Here 203. Now let us know the total. 970. Now let us effect the total. It should automatically agree. $310. Sorry. 310 plus 404. Here is a place where this number is not correct. 330 minus 277. 53 it is. Extremely sorry. It is 53. And it is 970. Now let us just know about that. 310 plus 404 plus 53 plus 203. 970. See, now let us just look into the solution. 404, 53, 203. There is a rounding off. If you have just done to the last rupee, you will not have this problem at all. And your cash account will automatically agree. That's it. So now look into that. 970 is the total that we have just got. Okay. Now, I will tell you top class secret. How in consolidation you can work out fast. With 5 minutes only you have. With 5 minutes only you have how you can work out very fast. 5 minutes only. How you can work out very fast, I will tell you. and how you can work out partnership problem also in 5 minutes time. I will just give you that tips. Use it only when you are in emergency. Use it only when you are in emergency. Yes. Yes.
Sir, there are people in the chat box. They have posted the questions, and let me read out that. MS Swati asked that working note should be disclosed at the bottom of the answers to get marks. Is it compulsory?
No. See, that is what I told you. Working notes need not necessarily be at the bottom. It can be part of the solution only. I will give you a classic example. So, distribution of 90,000 general reserve, you can do it there in the solution itself. See, only when you are not in a position to accompany in the solution itself, you are working, you are shifting it to a different location. That is working notes, is what many people are believing. Actually, it is not so. You can show the working for creditors even in the ledger account itself. That is also a part of working. So long as any computation is that you got to explain. So you cannot copy it from the calculator and put it there. Are you understanding? See, what many students are failing to understand as working note is, see, they pick it up from their calculator, 95% of 320, they will apply 304, they will apply. So from where you have got 304, nobody will have any clue. Right? That is a place where you got to show. This is the basic doubt people are having. Let me tell you, none of our working where it is picked up from the balance sheet, anybody can just do that. When a number is coming up, what students invariably commit as a mistake is, they will pick up a number from the calculator by applying 95% on 320 as 304. They will plant it there in the ledger accounts with no trace as from where they got this 304. That is a place where they lose marks. So it is not necessary that I got to note working note number 1, creditors payment 95% into 320 is 304. It's not like that. Are you understanding what I'm telling? So if it were to be part and parcel of the solution itself, it is working notes. So you don't have to tell that it is working notes. So, but the spirit of working note is that you cannot plant a figure from your calculator. The mistake that people commit is they plant a figure into the solution, that is in their answer sheet, without giving any clue. There they lose marks. Right. Any next question?
Oh, very impressive, sir, that you completed CA in 21 years. They are setting the comments.
Yeah, please. That is if there were to be any doubt on the subject, you please read. Otherwise, praising and all that, you please leave. See, I will tell you, there is one particular matter which I want to tell you. I studied in a government higher secondary school only, and I scored 847 against 1200, and I did not get even proper admission into BCom. And with lot of pestering the principal, I got the admission. Not with anybody's recommendation. Almighty only helped. It prevailed in his mind that I should be taken. That gentleman asked me, will you become CA? Yes, sir. Don't say yes for the sake of become. Yes, sir, I will do it. And I've done it. And I knew Dr. K. Ganesan, the principal by that point of time, was very happy to introduce me in Friday prayer. That such an incident he remembered and conveyed it in the prayer hall. So that was a great honor. That is all gone. At the age of 20, when I was just doing my CA intermediate, I have completed. 1 year later, after my BCom, I have completed CA. See, that is only to convey a point that a person from a government higher secondary school who could do foundation, I mean entrance at that point of time, intern and final, all in the very first attempt, but no rank, all self-study only. For me, institute study material is Bhagavad Gita for me. So I have never referred to any textbook and followed only one institute study material, even for audit, even for law, because there are two things. One, I really like the institute. Then number two, I did not have the affordability to have another alternative. So there are two factors and really helped me. Please, today I find you have many choices. Today you have multiple things and people just follow that. I'm just not finding fault. See, by default itself, it happened to me. And even today, I really love institute study material. I have not I have just done private classes. I keep institute study material for the purpose of classroom. I never try. Maybe my method of presentation will be a little different. So therefore, do not bring out any sort of compliments that is given only for the purpose of bringing you that confidence that such a person who can do it at the age of 21. And when I started taking classes, some of my classmates have become my students. Some of my seniors have become students of my class. They were asking whether I should call you as Murali sir or Murali only. I said, you don't have to call. So you just raise your hands, then I will understand that way. Even when I was just doing CA, I started doing that class taking. Even in the office itself, after office hours, when they have all the doubts, definitely I was just clearing out. I was feeling very happy that a teacher's job will be best acknowledged by all at all points of time. So anyway, it is all praise to Almighty. Any doubt on the subject, please read out.
No more doubts, sir.
Yeah. I know.
Okay, sir. They responded, okay, sir, understood, sir, and etc.
Right. Thank you. And we shall have a break at the appropriate time. So I just don't want.
Sir.
I just don't want to take up a break at exactly by 5:30. So at an appropriate time we shall have, or maybe even without a break also we can just go. Now let us just take up. The shortcut method. Even at the time of 5 minutes before you can just crack it under examination times. The answers. I mean for that matter, I would like to take up some other example, because same example when I'm just doing, people would be knowing, sir, you are knowing about the working, and therefore you are telling that it is very easy. See, a new problem when you take up, how fast you can work out in 5 minutes time. I will tell you. Consolidation, I would like to take it up. Because when I'm telling, people will normally be telling. See, even when he was a student, when sir is telling, he will tell all this. Whether he will be in a position to properly do it as a student. I have asked. I made a lot of criticism. I just made a lot of nasty comments and all that. I know always a student's mentality. First, I was a student. Then I become a sir. So therefore, I will always have that student's feeling first. So people used to tell, sir will tell he is coming with good preparation, like a student, whether he can do it. Sir is teaching only one subject, whereas student need to undergo the test for all these subjects. Right. Now, let me just take up another question. And how fast you can work out, I will tell you. Now, let me take up, because I'm just looking into a problem without revaluation. I'm having revaluation, because for problems with revaluation, you will have some extra working that you got to do. So therefore, it will not be possible within 5 minutes time. I'm just looking into a problem without revaluation. Because getting revaluation is a very rare possibility. Now, let me just try that here. So in the case of question number 5, let me just check up if there were to be any revaluation. So anyway, it is not having any revaluation. Let me tell you as how you can crack it. See, this is a problem I have before me 5 minutes. Okay. I read the problem where I have my investments shares in S Limited 3000. So, and I read the problem that they have some bonus issue as 3 for every 5 held. 3 for every 5 held. So, the number of shares that we were holding. So, for bonus shares, we do not pass any journal entry for receipt. One moment, I will just switch on my office lights. One moment. Now, this problem is a fantastic problem. 3 paid up for every 5. Say today, the capital of this particular company is 4,800. This is after bonus issue. Correct? So when we have the ratio as before bonus, bonus and after bonus. If you have before bonus 5, 3 and this becomes 8. Correct? Before bonus when I have 5, bonus being 3, after bonus it is going to be 8. So after bonus when it is 4,800, how do you know it is 4,800? They have given in their capital 4,800. Definitely bonus issue they would have recorded 4,800. What should have been the number before this? 4,800 divided by 8 multiplied by 5. It should have been 3,000. It should have been 3,000. How many shares that they bought? Let us just know about that. So H Limited got 180 lakh shares. 180 out of that. So how much it works out to? 60%. 1,800 out of 3,000 working out to 60%. Now NCI or minority interest is going to be the remaining 40%. Am I right? All of you closely follow. Now, within few minutes, you can arrive at non-controlling interest just like that. I will tell you how. See, now I will take up the net assets of the subsidiary company 4,800, 1,380, 1,620. If I aggregate both capital and reserves and surplus together, let me know how much is the total I am ending up with. 4,800 plus 3,000, all that I am getting 7,800. On to that I will apply 40%. So my non-controlling interest comes to 6,000. How did I arrive at this figure? 40% NCI multiplied by 4,800 plus 3,000. When I just do that, 7,800 into 0.4. How much I get? 3,120. Extremely sorry. 3,120. 3,120 is what you just get. Now let us just find out from the solution. Is that figure for minority interest that you get is that number? Just see 3,120. How much time it will take for you to arrive at this number? Are you understanding what I'm telling? So it is not necessary that I have to have cutoff. It is not necessary that I have to have classification. It is not necessary that I have to have a template. Straight away, one out of these 3 numbers I can easily work out. 3,120. How did you arrive at? Working note number 6. Working note number 6, what institute is just telling, because they are not in a position to work them out in that particular place. Therefore, they are saying, please look into working note number 6. Correct? Whereas I can as well show 40% into 4,800 plus 3,000. When I just do that, I am getting 3,120. The institute is not knowing how to get it short. I am showing. What is the problem? It is not necessary that I should have working note number 6 to say that it is 3,120. Here I am demonstrating to you as how 3,120 you can arrive at. So minority interest, I will show this 3,120. I will tell it in the outer column. What is the problem for you? I don't have to just have separate working note and do all that operation. When I have only 5 minutes, I need to know how to manage my time. Nobody need to tell me as how do I do this work. When you are having only 5 minutes before you, don't do this religious work of cut-off, classification, chart and all that. Do unorthodox. So long as 4 is hit, 6 is hit, switch hit is correct. If I am getting 4 and 6s without getting out. I can switch hit. I can go for reverse sweep. So long as they are productive, people honor it. People will honor it. People will consider that it is a new principle that you have developed. Left-hand batsman had become right-hand batsman against Ashwin and he lost. Though he was hit, Ashwin was hit, but he got his victim. And you people can easily understand to whom I am just referring to. David Warner. So, therefore, you need to find time. Okay, this is one out of these three. Then, by going through this problem, you should be in a position to arrive at what is a capital profit. What is a capital profit? Arrive at what? Goodwill capital reserve easily like this. That requires some amount of practice. You don't get it in the very first problem. Then everybody will stand in the queue. Now I have given you a shortcut for minority interest. You can try in any problem, any textbook. You will find out. For revaluation item, then you have revaluation gain and additional depreciation. Revaluation loss and excess depreciation need to be adjusted with your equity capital and reserves and surplus. Apply that percentage. You will get it right in every problem. Right? So, you need to get involved in the subject and you will be the best person in this world. Let me tell you. Next. This I have conveyed to you. And one more thing, top class secret I am telling you. Goodwill and MI, you can do it like that. Every bit of assets and liabilities you religiously follow. Parent, subsidiary, mutual owing, stock reserve, anything that you just try. Don't tell to others, even if it is unethical. Please bring out balancing figure towards consolidated reserves and surplus. Because that is what I am telling you. 5 minutes before you can just do anything. In the rest people say, I do not know whether it is right or wrong. In love and war, nothing you can see as ideally that you got to follow. Anything is okay. Anything is okay. So therefore, you can finish off in 5 minutes a consolidated financial statement. Now I have shown you, I have demonstrated to you. Similarly, I will tell you, if a person is not knowing much of accounting, sir, I just started learning accounting this way. So this to and by preparing ledger accounts taking more time. But still, I want to know realization, profit or loss. Just like that. Like a layman, I can just prepare. So, ledger accounts, only those who are having the formal education will know. In practice, what will happen is that I got to deal with a person, client who is not knowing accounting. But I got to convince him. How do I do that? So, just watch out. Balance sheet value, realized value. Difference is going to be profit or loss. Fixed assets you have, trade receivables you have, stock you have, creditors you have, expenses you have. These 5 items only cost you the profit or loss. Where from you are getting the loss, you should know. You cannot be just telling, sir, I got this profit or I got this loss by preparing realization account. So realization account is there only for those who know accounting. I have a client before me who is not knowing anything about accounting, but I got to convince him. Only when I convince him, I will get my fees. Same is the way, only when I convince my institute, I will be getting marks. So your position and my position are the same. Therefore, you need to have 100% understanding on your subject. Now let us just take a fixed assets at 500, and this at 300, trade receivable at 300, stock at 300. Trade receivable as 500. I don't touch cash because on cash there will not be any loss unless I lose the cash. So credit as 320 and expenses in the balance sheet I don't have, 0. What are the corresponding values that I was just getting? What are the balances I was just getting? Fixed assets realized 520. Difference is profit only. Stock. Whether it was sold or taken over, for me the same. 250. Which is loss by 50. Trade receivable 440. 60 loss. 320. This becoming 304. Am I right? Is that 304? Yes, 304. So in case of liability, less liability that you pay is a gain. Gain by 16. Expenses I never had, but I have to spend. So 6 rupees will be a loss. So this is going to be 80. I close my eyes and write as 80. How come? If I total, I should be getting 80 as a loss. So this is 116. 116 as loss and 36 as a gain. So where will I get my, this is the way I am just getting. I don't have to tell realization account, you transfer all assets and liabilities. Why should I tell all this to a layman? Even when you have 3 minutes before you work out like this. Now I'll tell you how you can just work. So your realization, profit or loss can be developed like this way only. That is the reason as why you need to know what you are doing 100%. So just because it is conveyed in the format, you should not do it. You should really know it as how the flow is generated. If you know this is the flow, this is the way you got to take it. Are you clear? See now, at this moment, I have taken up 2 topics. Though dissolution problem is easier, but we have developed a confidence on the subject with a simple problem. Try any problem you can try, it is going to work like this. Now, let me try internal reconstruction. Internal reconstruction. What is an internal reconstruction? Where you have, briefly, let me just communicate about internal reconstruction. Say a company is having some history, is having history of making profit. And they have created a brand. They have got a goodwill. One moment. They have just got some, they have made profit, they have created a brand, they got a goodwill. But because of some bad project, they ended up with loss. Correct? When they have ended up with loss, the loss-making tenure is getting over. They have ended up with loss, but they want to take up the company to a new height by taking up a new project for which they require some bank assistance. What is that? You require bank assistance. Are you understanding? No banker will award loan when a company is reporting loss. If you are booking loss, why should I fund you? Is what they will be asking. Why should I fund you? That is the one that they will be asking. That is the way they will be asking. So, in order to get the financial assistance from the bank, they got to remove the loss. So, how the loss can be removed? How the loss can be removed overnight? Unless shareholders sacrifice. Unless they sacrifice. One moment. Unless they sacrifice, they will not, you will not be in a position to turn the business on. So, sacrifices would mean from a higher face value, I want to have a lower face value. Lower face value I am just getting. Are you understanding? Are you understanding? So, from higher face value to lower face value, when you are doing that sort of reconstruction, reorganization is what we normally consider as internal reconstruction. That is the one that you are considering it out as what? Internal reconstruction. If outsiders are participating, if participation were to be, if participation were to be from inside, that is only from equity shareholders and preference shareholders, then it is internal reconstruction. If outsiders are also participating, who are outsiders? Debenture holders, creditors. When they are participating, then you call this as reconstruction program. Is that right? So, reconstruction account. All these sacrifices, what we are talking about, will be pooled. Either in capital reduction account or reconstruction account. Capital reduction is for internal and reconstruction is for when outsiders also participate. So don't get the impression only when outsiders participate it is reconstruction. It is not like that. So both insider and outsider, then it is reconstruction. Correct? Say after that, what we are expected to do from the pooled figure, we are expected to write off not only profit and loss account, but also unrepresented assets. Also what? Unrepresented assets. What do you mean by unrepresented assets? Say when the company was booking loss, the board of directors, in order to play less the loss, what they do is that they just go for some creative accounting. They call this as CA, not chartered accountant. Creative accounting, fraudulent practices. What is that? Instead of charging 10% depreciation or 20% depreciation, they would get some opinion from some expert and they would reduce the depreciation to 2.5% or 5% as the case may be. And they would like to underplay the loss. But the real damage they might have happened much greater. The real depreciation might be greater, but they can't avoid charging depreciation. They would have done all these fraudulent practices. So therefore, the book value may be greater, the real value may be lower. And the difference is what we call it out as what? Unrepresented assets. So the pooled amount shall be used for writing off profit and loss account and unrepresented assets. And if there were to be any balancing figure remaining in this pooled account, then it should be transferred to what account? Capital reserve account. This figure shall not be utilized for the purpose of declaring dividend. This capital reserve cannot be used for the purpose of declaring dividend. Correct? Are you understanding? And then, having done this work, you require the permission of the court. And the court will take into account the confidence of creditors. Why creditors' confidence is very much required is that capital account is getting reduced. Creditors contributed money thinking that the capital of the shareholders will be this much. When they have contributed 60, 40 would have been the creditors' amount. So thinking that owners will have more interest on the company because their investment is more than the borrowing. When the capital amount is reduced from 60 to 10, 50 reduction would mean what will happen? The owner's interest will be 10, outsiders' interest will be 40. So what it was 60, 40%, now it will become 20 and 80%. Therefore, creditors might have the feeling that the owners will not have interest because their investment proportion had come down to 20, outside stake went up to 80%. So definitely they will have that lack of confidence in their mind. So the court will take into confidence these creditors before they are giving sanction to this internal reconstruction. And therefore, let us assume that in all problems on internal reconstruction, all these formalities were taken care. Is that right? And once a company is out of all these problems, they cannot be considered at par with other company which is not having any loss. So, a company which has got this sort of reorganization carried out should definitely be differentiated with other companies. Therefore, under-reduced will be titled with the name of that particular company. So, the balance sheet of that particular company, which is going in for this capital reduction program, after the reconstruction is carried out, compulsorily they got to have this under-reduced. See, under-reduced. That means a stigma is embossed on the name of that particular company, whereby by reading the face of the balance sheet itself, people will be alerted. Okay, you have got to be very careful with this company which had underwent a sweet change to their convenience, and therefore they will be little apprehensive, or they will be taking up their own cautions. Okay, we used to ask these questions, especially to my grandmother. I used to ask these questions. So in good olden days, whether you had jail, whether you had all this court of law, she said, yes, court of law and jail. We do not know as whether jail of this particular size or magnitude was there. Then I was asking how they were punished. So in good olden days, when a particular person has got to be imprisoned, but you do not have the cell, jail, etc., how they were done with. See, how they have done with is that on the face of the person, indelible mark will be kept with red and black. Red and black, Sembulli, Karumbulli is what my grandmother used to tell. That is in Sembulli. Red dots, black dots. On the face of it, a person is having would mean the other people will be alerted. Hey, this person had stolen something and got a judgment like this. Please be careful. Likewise, company with under-reduced would mean you got to be very careful. Are you understanding? So, the spirit of internal reconstruction I conveyed. Journal entry has got to be passed very easily. This is one of the easiest topics that we have. So, a higher equity capital has got to be debited. A lower equity capital has got to be credited. Whether you are to credit to capital reduction account or reconstruction account will be dependent on whether outsiders are also participating or only insiders alone participate. So, that you have to decide by reading the problem itself. Now, I will demonstrate in this particular case as how journal entries are being passed. Capital reduction would mean only equity shareholders and preference shareholders alone participate. Now, let us just see the question. Here they say preference shares written down to 75. Then they just find the outsiders are not participating. That is what we have to understand. By going through that, you will come to know. In other problems, they would have used the term as reconstruction account. Here also reconstruction, capital reduction only. So in all places, they are using capital reduction only. A little sorry state of affairs. So if outsiders are participating, they are not expected to use capital reduction account. They are expected to use reconstruction account. Let me just check up if there were to be, yeah. So when debenture holders are participating, then you find the name of the account as reconstruction account. Trade payables also getting reduced. So reconstruction account is appropriate when outsiders participate. If insiders alone participate, the name is capital reduction account. See, a very easy topic. So I would like you people to try this particular topic of your own. So let me tell you, advanced accounting topic, that is subject by itself is very easy to score. I'll tell you how. Because there are 6 slots that you have. And definitely from each topic, almost every topic is getting represented either in a small problem or a bigger problem. Go prepared for all that. So absolutely, you don't have to ask which question will come from which area and all that. So make an analysis, and definitely this particular topic is going to be very, very, very easy for you to crack. So I just don't want to try a particular problem, but at the same time, I want to cover. So thereby, I would say that to an extent, this internal reconstruction is getting over. If we were to have good number of time, we would have just done that. Now, so in that basis, let me take up liquidation as another topic before us. So now let us just try this liquidation of companies. So we have seen dissolution of firm, and for a corporate, winding up is a process. Winding up is the process, and you have to say that the end of that process is going to be liquidation. So it is like winding up is like journey, and destination is like liquidation. So it is something like this being the solution, this being the answer. What is the difference between solution and the answer? Solution is the process, long process. Answer is a destination. It's static. So likewise, winding up is a process, and you have liquidation as the end. So now this particular topic by itself, I would say, Companies Act focus is getting diluted, and you have insolvency and bankruptcy code, IBC, coming into its place. Say somehow our institute had not brought the study material to match with IBC. IBC is totally a final subject, so therefore we are studying somewhat a little older one. Say, let me just be very open to tell that. Even if it is a mistake committed by institute, we have got to accept, yes, it's a mistake. So they should have just brought material to match with IBC, because all this liquidation, majority of that is covered by IBC. Okay. But yet the older one only we are taking up. Now, what is the problem areas that you have? Problem areas are 3 in numbers. Problem areas are 3 in numbers that you have. What are the 3 areas that you have? Any idea? Number 1, statement of affairs. What is that? You have 1 as statement of affairs. Then number 2, we have B list of contributories. A list of contributories and B list of contributories. And then thirdly, you have liquidate as final statement of account. Liquidate as final statement of account. So let us have 2 minutes break at this moment before I could start, because my tea had just come just now. I will have it. You don't have to have a break on that. We will take up one problem. By that point of time, when we read it out, it will be ready for the purpose of execution. Switch off the fan. Yes. Say we would like to try firstly illustration number 8. So I will just slowly roll over. You please people read out. In the meantime, I will have my tea, because 3 hours at a stretch is going to be costing a little amount of cord friction, vocal cord. One moment, I will switch off my fan. Omega resolved on 31st of March 2000 X1. that the company be wound up voluntarily. The following was the trial balance extracted from its books as on that date. PPE 200,000, inventory 120,000. Book debts 240,000, cash in hand 40,000, profit and loss account debit balance 300,000. 1,006% preference shares of rupees 100 each fully paid up 100,000. 2,000 equity shares of rupees 100 each fully paid up 200,000. 2,000 equity shares of rupees 100 each, 75 paid up 150,000. Loan from bank on security of stock 100,000, trade payable 350,000, total being 900,000. The assets realize the following. After all costs of realization and liquidated as commission amounting to rupees 5,000 paid out of cash in hand. Property, plant and equipment 168,000. Inventory 110,000, trade receivable 230,000, calls on partly paid shares were made, but the amounts due on 200 shares were found to be irrecoverable. You are required to prepare liquidated as final statement of account. One moment, let me finish off. Otherwise, it will become cold. This problem is also on the same lines as that of your dissolution of firm. This is liquidated as final statement of accounts. This is a summary cash book. So we don't have to just do any process like preparing profit and loss account or the balance sheet. So we had cash in hand to the extent of 40,000. Opening cash 40,000. Say we have the waterfall of how the payments are got to be made. See, for that particular matter, we would say creditors are to be classified into two, generally, secured and unsecured. So secured against a specific charge, specific asset, specific pledge, say such as land and building, plant and machinery, land and building, plant and machinery. Then the other one, which will be floating generally on inventories and for book debts. Mostly it will be that. Mostly it will be floating on current assets. It will be debentures. Unsecured creditors, where you can say preferential, the other one being non-preferential. So what is the order of effecting payment? See, who are preferential creditors? Generally, the preferential creditors are wages, salaries, and taxes, etc. Okay, wages, salaries, taxes, etc. We will just go into greater details a little later, or possibly I will show you what and all will come under preferential creditors, so that You are mentally prepared for that. So here, payments are to be made in the following order: legal charges, liquidation remuneration, liquidation expenses, debenture holders, including interest up to the date of winding up, creditors, preferential creditors. In actual practice, preferential creditors are paid before debenture holders having floating charge. Unsecured creditors, shareholders for dividend declared but not yet paid, preference shareholders and equity shareholders. This is what you can call it as a waterfall model. So, as how you are expected to effect payment, that is what you have, right? Now, let us just look into preferential creditors. Yeah. Who are preferential creditors? So, unless we know about who and all will be included, any discussion will remain incomplete. So, we will be thinking something else, whereas the meaning may be different. In a winding up, there should be, that is, in a winding up, they should be paid in priority. It should be they should be paid in priority to all other debts subject to the provisions of section 326. So, this diagram itself will bring out the matter. As I told you, salaries and wages. Then holiday remuneration. What do you mean by holiday remuneration? It is leave salary. See, leave salary would have been much easier for you to grasp. So, holiday remuneration would mean, it sounds a little odd, but leave salary only. Contributions under employee state insurance. Then compensation in respect of death or disablement. Then provident fund, pension, pension fund and gratuity fund, expenses of investigation, governments and taxes. That is what in brief I have just communicated in short. So these people should be paid first. See, actually, secured creditors having specific charge, they will take charge of these assets and they realize from these assets and set off against the liabilities and balance, if any, they give it to liquidator. So that is what we have got to understand. Generally, when nothing is provided, we understand that assets which were given as security, specific security to creditors, that assets will not be realized by liquidator. That will be done by that creditor, because person who had lent the money will have greater interest on the subject matter than anybody else. So therefore, by default, we will be assuming that such creditors will be selling off. One moment. So, liquidators, see, I just taken up this way. Liquidator will not be in charge of these assets. So, liquidator will be getting any amount after settling the liabilities, and only that much they will be getting. Then, after that, when liquidator himself has got to be paying, firstly, he will pay to preferential creditors, then he will be paying to floating charge, and then non-preferential. Then comes, of course, preference shareholders. And lastly, we will have for equity shareholders. This is the order of payment. Is that right? And prior to this, legal expenses, liquidators remuneration, then liquidation expenses. So these are the first three items. Then these are the items on this may be the order, you can say. So I hope that the points are clear for you. So illustration number 8, we will take it up. Okay. In illustration number 8, we have just gone through the item and I would like to use institute study material solution directly for certain cases. So instead of writing it out, so that we can work out a little faster. Okay. So that we can cover a little more. So number 1, where you have opening balance of 40,000 and you have against that commission, that being the remuneration that has got to be taken up there. And then the property, plant and equipment, and none of the assets are given as security, and loan was taken from bank. Against that you have stock, which is a floating charge, and none of these assets are given as a specific security to any of the creditors. So therefore, directly these figures are appearing there in the books of liquidators final statement. 168,000 you can see, whereas inventory of 110,000 were loan from bank, they have given for 1 lakh of rupees. So therefore, we'll assume that they are taking up. So therefore, their amount is deducted and the balance amount is given to them, and book debts of 230 will be taken up. Are you clear about this? So therefore, that particular asset which is given as security, only the creditor will have the first preference to adjust, and therefore any surplus only liquidator will be getting. So therefore, opening balance and this much realized at this moment, and liquidator's remuneration taken up, and after making that trade payable is the only item that you have as a liability. And for trade payable, is there any discount? So when nothing is mentioned, full amount has got to be paid. That is what you have as 350,000. And at a point of time, we need to know as who should be paid after that. When all liabilities were paid, then preference shareholders have got to be paid to the fullest extent, because they are fully paid, and 100,000 they were paid. And that is a point of time, certain things we got to work, and only then you would realize it. So here, let me just book this place and assets realized. Assets realized, we have PPE 168,000. Then you have inventory excess over bank loan 10,000. Then you have trade receivable 230,000. So always remember, when you are developing it, like institute, don't try. You try in your own way. I'll tell you the reasons also. Say I'm using my mobile as calculator, okay? So don't think that I'm just meddling with 40 plus 168 plus 10 plus 230. It is 448,000. So here we take liquidators remuneration, that is commission, to the extent of 5,000. Then trade payable to the fullest extent of 350,000. Then comes after trade payable, then you have preference shareholders payment to the extent of 100,000. So that point of time you should know as whether you are crossing that. So 450, here itself you are running short of money, correct? So that you don't find it in the solution. So when you write, start doing it, you will never know. You will never know that you are having this problem. Okay. See, you will never know that you are into this problem. See, that is the reason as why it is better that you do it. Okay. See, I'm just bringing out a computation. Okay. So have that in your mind. So will you be in a position to effect the payment when you are having only 448 before you? Never. So this itself will be 455. How can you issue a check for 455 when you have only 448? So therefore, you are expected to raise money from your shareholders who did not pay you fully. Who are those who did not pay you fully? So preference shareholders, we have taken up. Okay. So there were some shortage. We will issue the check and we will try to manage. So from this class of shareholders, so assume that 2000 shares against which 25 you are bringing out. You just bring out. You bring out a computation. So this is the place where you can say it is a working notes. Here is a place you say that you have a working note. So you have receipts that you have to the extent of 448. You have payments that you got to make for, it is 455,000 you have. 455,000 you have. So therefore, 7 shortfall you have. We will not be in a position to make this 7,000 and calls in arrears that you have 2,000 at the rate of. So here they have mentioned where you cannot realize the sum from 200 members, that we will take care. So only for 1,800 they are just bringing out, but in your computation, we will just find out how much money that we can realize. 2,000 into 25. Or here itself we can put it out this way. $1,800 into 25. Now let's just find out what is that number that we can have. $1,800 into 25. So you will be in a position to bring about 45. So then you will have 38 before you. You will have 38 before you. And if that be the case, for how many shareholders you will be in a position to distribute? You have 2,000 fully paid and you have 1,800 fully paid. You have 3,800 shares will take up 38,000 rupees. Are you understanding? So this working, you will not be in a position to do it in liquidated as final statement. So where would I show 448, 455 and all that? So it is a running account, 455. So therefore, here is a place where I got to demonstrate. Now you see as how we are developing it. So how 1,800? So 2,000 minus 200 at the rate of 25. That is the sum. This is going to be the cash available. And you have 3,800 number of shares. So what is the amount that I got to distribute? Distribute at the rate of rupees 10. How come? 38,000 divided by 3,800. That is why we have just got it. Distribute at the rate of rupees 10, 38,000 divided by 3,800, that gives at the rate of rupees 10. So there is no meaning in collecting 25, paying 10. Therefore, what is that you could have just done? You would have collected only 15. Collect only 15. So therefore, this is working note. So you can say calls in arrears 1,800 into 15. Correct? 1,800 into 15. How much it comes to? 1,800 into 15. 27,000. It is 475,000 on the receipt side. And equity shareholders who were fully paid. How many of them? 2,000 of them I got to pay at the rate of 10. That is what we have said in our computation. Pay back 10. 20,000. This you make it out as 4,75,000. This you can show as working out. Are you understanding? So therefore, this sort of preparation we find in our institute study material missing. So they could have just developed one total here. They could have just mentioned a total here. But instead, they have taken up everything. So 448. Now you tell me where from you are getting 448. What CS student would be committing a mistake? He is picking up from 448. From where you have got 448? Tell me. Where in your computation 448? So the student should assume, oh, 40 and 408, they are doing it. What is the problem for anybody who could have just done like this? 448, I can explain. I can explain it like this. This is what I'm telling you. So you raise your standards above institute. Right. I'm not just finding fault. See, I told you, people seated in the institute are human beings. They are not like Lord Mahavishnu having chakra and chanku, gada and flower, chadurbuja. They are not. They are also like anybody. They will commit mistakes. No problem. Thing is that they have time for preparing any correction where we don't have the scope under examination condition. So please be careful. They are doing it for salary. Institute staff, faculty members, they are doing it for salary. Whereas we are doing it for our life. Who will be more serious in this subject matter? It is only the students and faculty members. Therefore, this is the way you got to prepare. Are you clear? I hope that the point is very well driven, that you need to be very careful when you are preparing it. Then, that is liquidators' final statement. Now, I would like to do a problem on B list of contributories. What is that? We have it in case of B list of contributories, and what do you mean by A list of contributories? See, when a liquidator is appointed, what will happen? Director's position will automatically stand vacated. Director's position will stand automatically vacated. Director's position will stand automatically vacated. Shareholders will be referred to as contributories. These contributories will be referred to as A list of contributories and B list of contributories. One moment. What is that? A list of contributories and B list of contributories. Who are considered to be A list of contributories? The present shareholders. One and only when the present shareholders are unable to contribute. When they are unable to contribute towards the arrears towards capital, then it will come to B list. People might ask this question, what do you mean by A list? Why you are chasing A list and B list? See, when the company is under liquidation, you can't bring out a big fight with your shareholders, because shareholders are old and the new. I'm just giving you one sort of example, then you can visualize. It may not be 100% true, but you can understand the background. and visualize that scenario. So what will happen is that old shareholders would have sold shares to new shareholders, saying that the company is going to produce you honey, milk, fruits, and everything is going to be very great in the future. Who? Old shareholders, very cunning, let us assume, and these new shareholders are naive. They are a little innocent fellows. Believed that old shareholders' statements were all true and they got the shares. Share transfer audit, you are done. No objection certificate they have given because it is partly paid. No. This naive shareholder, believing that it is going to be milk and honey flowing, did not happen. The company is getting into liquidation. When liquidator is approaching existing shareholders, that is A list, they are telling, they are putting their hands up. They are putting their hands up. I don't have money. So the liquidator will have the next choice to look into those who have transferred partly paid shares within 12 months prior to the date of winding up. Their names will be put under what list? B list of contributories. Now you can understand the logic as why A list of contributories were left. It's not that liquidator is not leaving A list. They would have asked A list when they are not in a position to get that, because you don't have the time to fight because it is under liquidation. Therefore, you have to quickly solve the problem. When A is not there, when one window is closed, another window is open. So law had provided you that there is another window open. You can ask the previous shareholders who have transferred their partly paid shares to these people. You can catch them and ask. They are liable to a maximum extent of unpaid portion of the capital and not beyond that. When you have more than one such B list of contributories, then the liabilities can be distributed to that many B list of contributories, but in no case the liability can exceed the unpaid portion of the capital. Are you understanding? I think it should be clear for you. So if you have more than one B list of contributories, you distribute to that many number. You distribute to that many number in what ratio? In the ratio of their liabilities towards the unpaid portion of the capital. Where it is stated? Now it is stated here. Now look into the B list of contributors, shareholders who are transferred partly paid shares, otherwise then by operation of law or by death. That is considered to be transmission. See, otherwise then by operation of law or by death would mean that will be referred to as transmission of shares. So in corporate law, we used to have a reference. What is the difference between transfer and transmission? Transfer would mean a voluntary transfer of one share to another person. So where without a voluntary transfer, shares are transferred, that they are referring to as transmission. Anyway, so I'm just had the point. Within 1 year prior to the date of winding up, may be called upon to pay an amount to pay off such creditors as existed on the date of transfer of shares. These transfers are referred to as B list of contributories. Their liability is restricted to the amount not called up when the shares were transferred. They cannot be called upon to pay more than the entire face value of the share. For example, if shares are being face value of 100 and were paid 60, B list of contributors cannot be called upon to pay beyond 40. Conditions. Liability of B list of contributors will crystallize only when the existing assets available with the liquidator are not sufficient to cover the liabilities, and B, with the existing shareholders failed to pay the amount due to the shares of the liquidator. That is, existing shareholders will be taken up under list A. See, when you don't have the money, how it had happened in the last problem in liquidator's final statement, In Liquidator's final statement, they did not had money. There was an insufficiency to the extent of 7,000. And they have just called upon the A list of contributories to the extent of 25 rupees. Remember that problem? Finally, they have called up only to the extent of 10. So you just take 25, return 15. Why should I do that? Take only 10. Existing assets were not sufficient. Fortunately, existing shareholders paid. In case they could not pay, you can take it from the previous shareholders who have carefully transferred their partly paid shares within 12 months from the date of winding up. Right. So have that in your mind. Let us take up on to illustration number 4. In a liquidation which commenced on 2nd of April 20x2, certain creditors could not receive payments out of the realization of assets and out of the contribution from A list of contributories. The following are the details of certain transfers which took place in 20x1, x2. Shareholders X, A, B, C, D, number of shares transferred at the date of ceasing to be member 1500, 1000, 1500, 300 and 200. Date of ceasing to be a member on 1st of April x1, 1st of May x1, 1st of July x1, 1st of November x1, 1st of February x2. Creditors remaining unpaid and outstanding being 4,000, 6,000, 7,500, 8,000 and 9,500. All the shares were rupees 10 and 6 paid up, ignoring expenses of and remuneration to liquidator. Show the amount to be realized from the various persons listed above. Right. Now, first step, evaluation. So by looking into the case, what is that 12 months period? When it is 2nd of April, X2, what is the 12 months period prior to the date of winding up? From 2/4x1 to the previous day 1/4x2. This period, whosoever had transferred will come under B list. Anything prior to that, no way you can include them into the list. Here, X did this by 1st of March. So therefore, I would just say shareholders X, A, B, C and D. Date of transfer 1st March X1, 1st May, 1st July. So in which list? Here not applicable. What is the reason? Transfer took place beyond 1 year, beyond 12 months. One 5x1 to list, B list, B list, B list and B list. Correct? Number of shares, number of equity shares, not applicable. 1,500, 1,000, sorry, 1,000, 1,500, 300 and 200. What is the maximum liability? They said 4 rupees. Maximum liability at the rate of 4 per share. So in rupees, 4,000, 6,000, 1,200 and 800. The ratio at the very initial stage is 4:6:1.2:0.8 or 40:60:12:8, because at this point of time B, C and D are available there. He is not the only B list. So when you take up 4 as a base, 10:15:3:2. Then next, in this particular case, 60:12:8, or when you take up that, 15:3:2. So after that, it is 12:8 or 3:2. Only D. This is the first step that we will work out. Then distribution. Step 2. So when you have total A, B, C and D that you have liabilities outstanding, or I will put this way, maximum liability is 4,000, 6,000, 1,200 and 800. Maximum liability. Here I have a date. Creditors outstanding. First date is 1st May. 1st May, 6,000. I will have this total at the last. I will ratio of application 10:15:3:2. So what is the ratio? 25:30. 2,000, 3,000, 600 and 400. So it is 6,000 collectible. So in each case, I am comparing 2,000 is lesser than 4,000, 3,000 less than 6,000, 600 less than 1,200, 400 less than 800. So I am just comparing. Am I exceeding? Next one, 1st of July. Here, creditors outstanding, when I paid 6,000, these figures are cumulative figures. So I got to make this as 1,500, 7,500 minus 6,000. You should not be taking 7,500 when 6,000 got paid. Now the ratio of application is 15:3:2. So now you have got to distribute 1,500. Here not applicable. A will not come because any liability arose after his transfer for which he is not answerable. He is answerable only to the extent of liabilities existed until his transfer that he made and not thereafter. So, what is that we should do? Here we have got to take up 1500 multiplied by 15 divided by 20. How much is that? Let us take up this 1500 into that comes to 1125. 1125. Next one 1500 into 3 divided by 20. 225 and 150. When you do that, you have got to be a little more careful in doing it. All of you, please understand that. This in the institute study material, they will not show that 2000, 4125, 825 and 550. So, then what is it we are expected to do? Compare. This I will not compare. Here 4125 is less than 6000. 825 less than 1200. 550 less than 800. Therefore, the entire 1500 can be collected and paid. See, in the institute study material, they will not show. Here they are writing it. In the working note, you don't find. Whereas, this descriptive answer itself, I am putting it in the solution. Then, 1st November. 1st November. How much is that? 500 only. 8,000 minus 7,500. 3:2. Not applicable, not applicable. Here, 300 and 200. Now, closely follow. 2000, 4125. Here, 1125 and 750. 1125 is less than 1200. 750 is less than 800. So, therefore, the entire 500 can be collected. Are you clear? Next. D. 1st of February, increase is 1500. 9,500 minus 8,000. No ratio. Now I know the gap is only to the extent of how much? 50 rupees. So, not applicable, not applicable, not applicable. Here I will be writing only 50 because I knew the difference. To hit that maximum, I will have only 50. So, only 50 I will be in a position to collect. So, totally how much I will be collecting? 8,050 only I will be in a position to collect against the total of 9,500. Now, you see. Now, you see 8,050 only. Here they have distributed here 1,500. You can't do that. So, how much is that? 2,000. Yes. You just see. 2,000, 4125, 1125, 800. Just see. 2,000, 4125, 1125, 800. We just got just like that. So, once you are putting them into black and white in your notebook with proper understanding, you are the king and the queen. You will definitely hit the rooftop. 100 or 100 is possible. 100 or 100 is possible. You will definitely clear the examination. With that note, today we are concluding and tomorrow we are meeting. Is that okay? Anybody there having any query? Before I could just say goodbye for today and say good night for you. Let me just pick up from the organizers. Is there
Yes,
any
sir.
query?
There are two questions, sir, among the students. One is that can we draw flow chart in exams?
What do you mean by flow chart?
I
May I
don't know
just know?
that.
I think if it is reasonably
I think
conveying
they saw your flow chart and they were asking the questions for
what
theory
flow chart I
questions.
just drawn.
I don't know, sure.
Yeah, you
The
just
next
see
question is what should we do one day before exam?
one day before the examination. Don't study new, revise only. That I will do it in the next class. Tomorrow when we are just meeting, I will tell you what you are going to do. Where is the chart? I think possibly this classification, yes, you can do that. This they are calling it out as a chart. Yes, all this, let me tell you, it is not for secret practice. It is for opening examination paper only you are going to present. Then any other query?
That's all, sir. Everybody
all?
was saying, yes, sir. That's it.
Huh?
Okay, thank you so much, sir, for 3-hour long sections.
Yeah, no problem.
For sir, I wish all the students who are watching this to like the video and definitely subscribe to SICASA channel. Thank you so much, sir, for your
Welcome.
such a long section. Thank you so much, sir.
Thank you. Bye.